Let's analyze what the stock market did today, Thursday, February 17, 2022. This is the daily chart of the S&P 500. This is a setup, the levels I mentioned in the previous video. The range was 44.30, between 44.30 and 44.90. I said if it pushed above this level, 44.90, I would be looking for an entry to go long. That didn't happen. 44.30 dip below that, I would sell short, and that's exactly what I did. So for the record, I am short via the SPXU ETF. I shorted around. I got filled when the S&P 500 was trading around 44.10, so it was around this area. My initial stop loss was this high, but after today, after this big sell-off, I'm moving my stop loss to around 44.60, which means it would have to go and push above 44.30, 44.50, and these moving averages. That's lots, like five layers of support, not of support, of resistance, which is very unlikely. If that happens, then I get stopped out. Levels that I'll be watching tomorrow to the downside will be today's low, 43.70. The one below that, 43.50 and 43.30. And as usual, I'll be looking for real-time price patterns. If we dip lower, to book some profit. If we move higher, I probably won't even let my stop execute and could probably take my loss at a lower level. See what happens tomorrow. Take a look at the Nasdaq 100. This one, big sell off, was down 433 points or almost 3%. Full disclosure for the record, I am short VIS triple Q ETF. That is wrong. I'm not long. I am long the ETF, which is shorting the Nasdaq 100. The levels I was watching coming into today, mentioned in the previous video, 14,400 and 14,700, which was a very narrow, relatively speaking, narrow range. And I did mention that if it dipped below 14,400, I will consider going short. Well, that happened, and I did. I got filled around 14,300 down here. My stop loss initially, when I placed my order, was above this level. Now I will lower it to today's right above that. Is that the 10-day and the 20-day moving average. Yesterday close was very bullish. I am glad I did not go long. I did not want to anticipate, especially like I said, it's a news driven environment. I remember doing that up here and I lost some money. That's when I bought it right against that 200-day moving average, anticipating a breakout above that. Well, that didn't happen, and then ended up selling down here. So I learned my lesson, decided not to anticipate and wait for a confirmation or for a breakout out of this range. And it happened to the downside, so I'm short. And the Dow Jones Industrial Average, this one was down 622 points, equivalent to 1.78%. This one couldn't get above this very strong resistance area. All these moving averages, big sell off. Now it's trading around the previous, this low from 4 days ago. Not looking good. Who knows where it's going to find support? Could be down here or here. I can see that's very strong support level or zone down here. We'll see, but definitely doesn't look bullish. Now trading below all the major moving averages. Now the path of least resistance is south. Now analyze the Philadelphia Semiconductor Index. This one, for the record, I liquidated my position. Initially, my stop loss, I said it was below this level here. But based on the real-time price patterns this morning, I ended up selling, liquidating my position around this level, right around that 20-day moving average. Based on the other indices that were selling off, the S&P 500 has already broken below the range that I was looking at, same as the Nasdaq 100. So I knew that this one has had a high probability of dipping below this level. So I did not want to wait to get stopped out. So I ended up selling a little bit higher, took my loss, and move on. But this one looks very bearish now. Was it dropped below all these layers of support, all these moving averages, and then this level. So this one's not looking good. But yeah, this one can quickly, as soon as tomorrow, it's not too far away from these moving averages. So we can quickly gap up and reverse higher, but we'll see. But this one doesn't look too bad. Just didn't want to be exposed because once it starts dropping below major, very strong support levels, you just never know how far it will go. So liquidated my position. I don't really see any major support levels until right around this area, 3350 and 30, right above 3300. And the Russell 2000 small cap IWM ETF, I know the chart looks terrible, looks very ugly, very bearish. But if you look at it from this level, from this period, from here to here for the last, 2, 3 weeks, this one, relatively speaking, has been trading much, I'll say, better, more bullish than the other indices. This one is, yes, trading below these major long-term moving averages, but short-term moving averages is still trading above that 20-day moving average. And look at it, it's kind of slope, it's kind of flattish right now, and looks like it wants to go higher, slope higher. This one, if it dips below 200, this zone 200, 199, then I would expect big sell-off, momentum to pick up to the downside. However, it's still trading above, like I said, this range, that support level. So who knows? Maybe it bounce out from there, and this might be a good trading range between 200 and 210. But this one, it's not looking so good, but also not looking too bad. We'll see what happens tomorrow. Thanks for stopping by, and good luck trading tomorrow.